Welcome back to another episode here on the McHugh Insurance Group YouTube channel. Today's topic, we are going to talk about why the cheapest insurance you can get will cost you more in the long run, 9 times out of 10. As always, I'm Hunter McHugh. Today's topic came to me the other day. I was talking to somebody who insisted on having the cheapest policy that they could possibly have. They wanted to save money. They weren't concerned about the coverages. Without really understanding the long-term costs of buying the cheapest thing up front. And the area I want to specifically focus on is your auto policy, your personal auto policies, because it's one area that states allow people to have such low limits from a legal perspective that people think, okay, that's the cheapest thing, that's what I'm going to get, when in reality it's exposing them to so much more, such higher costs down the road. And really what that pertains to, the one area of focus I want to discuss is your auto liability limits. So when we talk about that, what we're referring to is the liability that you have for other people while you are driving your vehicle. There are two pieces to it. There are bodily injury and property damage liability limits. Those are the first two coverages on your insurance policy. We're not talking about coverage for your vehicle, that's comp and collision. We're not talking about roadside assistance or any of those other cool add-ons that people want to make a big deal about. We're talking about the number one most important part of your auto policy. And we're talking about auto liability. So as I mentioned, there are two separate pieces, right? Bodily injury, that's for when you get into an accident with somebody and you're at fault and you caused bodily injury to somebody else. That's where that limit comes into play. The second piece is your property damage liability. That is when you get into an accident with somebody else and you cause damage to their vehicle or any other property that may be around, okay? This is the number one area that people try and cheap out on their insurance, and when they have claims, it costs them twice, if not more, than it would have if they just purchased the appropriate limits. And I'll dig into that. But the first thing that's very important to know is what the state minimum limits are. This is the absolute minimum that a state will allow you to have. Now, it varies by state, but for the 3 states that we work in Delaware, the limit that the state requires each person to have is $25,000 of bodily injury liability per person per accident. They then require $10,000 of property damage liability. In the state of Pennsylvania, it's $15,000 of bodily injury liability and $5,000 of property damage liability. And then in the state of Maryland, it is much higher, $30,000 per person bodily injury liability and $15,000 property damage liability. Now, most people, and probably 70% of the policies that come across my desk have the state minimum, if not just a little bit more than that. But to make this very clear, I'm just going to walk through 2 very simple scenarios where you will see how these limits are going to cost you in the long run. Let's take the state of Delaware, for example. The state minimum liability limits are $25,000 for bodily injury per person and $10,000 of third-party property damage liability. Let's talk about property damage liability. If you are out there driving around in a beater, a 2010 Honda Civic with 150,000 miles on it, okay, and you get into an accident with somebody in that car, right now used cars, the market is through the roof. If you have state minimum liability limits, there are very few cars on the road that your $10,000 of property damage liability would be adequate for. Now, on the other hand, let's say you get into an accident with somebody who's driving around in a 2023 Dodge Ram pickup truck that costs them $85,000. Now, you get into an accident with somebody in that truck, you cause damage to their vehicle, you're going to burn through that $10,000 of state minimum coverage in a heartbeat. Now, the next question is, well, what happens when you run out of insurance? Well, then you come out of pocket personally if you were at fault for the accident. Now, there's uninsured, underinsured motorist coverage that people have to have, but some people skimp on that too. And if they don't have it, they're going to try and recoup that money from you personally. So let me ask you, would you rather pay 30, 40 bucks more a month or put yourself at risk of paying out of pocket 10, 15, 20, 80 grand for somebody else's property damage because you cheaped out on your insurance? The other side of that is the bodily injury liability. The state of Delaware requires you to carry $25,000 at a minimum of liability for any bodily injury that you may have caused in an auto accident. Let's just say you get into an accident with somebody and they have a neck injury or a back injury. By the time they get through all of their doctor's visits, God forbid surgeries, God forbid a worst case scenario, somebody becomes some sort of permanent disabled, has some sort of permanent disablement or some sort of permanent paraplegic or quadriplegic, $25,000 state limits are not going to be nearly enough. And again, I ask you, what happens when when you run out of insurance and that person runs out of insurance? If you are liable, they're going to try and recoup the rest of those damages from you personally. And if you could have just paid 30, 40, 50 bucks more a month, a few $100 more a year to have adequate limits, it wouldn't be a concern. And that is the exact problem, my biggest concern with state minimum liability limits. Number one, it's an issue with the state because they're not requiring people to have enough insurance, which is leaving a lot of people having to foot their bills personally. And number two, it's people who aren't out there educating people to understand what it is that they're getting and what they're not. Everybody's attracted by get quotes fast and get quotes cheap. The cheapest insurance you can get is often the worst and will more than likely cost you more in the long run. Whereas if you were to just buck up another 10, 20 bucks a month for adequate insurance, you would be much better off. We could talk for days about this, but hopefully those two issues highlighted kind of the biggest concern I have over this. So next time you're shopping your insurance, obviously look for the most cost-effective option, but compare them all with an adequate limit. Our recommendation at its bare minimum is $100,000 of liability coverage for bodily injury and a minimum of $50,000 for property damage. I personally, and I always recommend at least twice that. $250,000 of bodily injury liability and $100,000 of property damage liability. That is the area you want to be in. And compare them. Do the quotes at state minimum and then at those higher limits. You'll see it's not going to break the bank. And if you think it is, consider what would happen if you didn't have that liability limit and you got into an accident with somebody in an expensive vehicle or in an accident that caused extensive bodily injury. You would have much rather had those higher limits. All right, that's it for today. Be sure to stay tuned and check out more content. Thanks for watching, and be sure to share, like, and subscribe.